Well, hello, Switzerland, and welcome to your weekly Neoclassical Technical Analysis broadcast, where we go where no one else does, and we go to the charts. We look for supply and demand on the charts. We look for direction, opportunity, and we do it in a low-risk approach. I'm L.A. Little. I'm your host. This is the initial broadcast, and I welcome you to the show. Let's start here with a quick summary of where we're at and what happened the past week. I've just got an index list here, both of sectors and of the indexes. The big hits last week: finance, healthcare. That's probably no surprise. Those markets are in bear markets at this particular point in time, and they continue to do the same. We had a breakout in the utilities. We'll take a quick look at that chart. Tech continues to do fairly well, and we also have some good strength there in the consumer services. Let's pop into the charts here, take a look at them, see how the charts are lined up. Here's the SPIX, our broadest measure of the indexes. And what you see here is, a little bit of a bounce as we come off those lows in February, but we're already starting to fade. We got a little doji out here hanging by itself, coming after this swing point low one more time, and going to try to get back down to these lows again. And that's not a good thing. I mean, that's not a healthy picture. If you pull it over to a broader measure, right, look at it on a weekly, what you see is an entrenched downtrend that really hasn't given way. You had this sideways business, right, down in August, down again start of the year, or actually before the start of the year. Got a little bit of bounce here, but now it's trying to fade back over and come after this wide price spread bars low. If we pull it over, take a look at the even broader measure with the monthly chart, essentially you've got a big broad range, and you've got these swing point lows down here. Haven't been broken, but have been tested. We tested twice, or actually once here on this bar. We tested that low back from late 2014, and then that was also the low, if you go back far enough, back in 2013. So you've got this broad range that's set up. It's attempting to come down and test again and potentially break. If you look at the volumes on these moves, didn't have enough volume to break it down the last time down, but if you go back to that prior low in 2013, there was no volume there. Folks, if you break this, you're going to try to come back to a swing point high. That would be, in neoclassical literature terms, a test, a first test of a swing point high. We call that a retest and regenerate. The ideal is as you come back to this area, right, the first time after breaking out, as you come back to this area, if you've gone more than 6 bars, and we've gone a lot more than 6 bars on a monthly chart, that's probably going to be a sweet place to make a buy. So keep that in mind as we go forward. That's on a monthly time frame, so it's going to take a while to play out. But that is the notion of what's going on here in the broadest sense of the measure of the market. To get a good sense of what that looks like, right, we can pull over a chart of qualified trends. Now, in neoclassical, we qualify trends. We say they're either suspect or they're confirmed, and we'll talk about that more in other shows. On this particular chart, we're showing just suspect and confirmed trends. Blue here is your bullish trends. The orange line is your bearish trends, and the green line is your sideways trend. In neoclassical, we algorithmically determine trend, and if we're going up or sideways or down, really that's the only 3 ways you can go, and this gives you a sense of how that is shaping up across all the stocks in that index. And what you're seeing is a crossover. That's a good sign, but it's not showing strength yet, right? We've got the crossover in effect. It's not showing enough strength yet in enough of the highly weighted sectors and stocks to actually pull this index higher. So you got good breadth, in other words, on this push up off the February lows, but that breadth hasn't translated into better chart patterns on the index itself. And if you look at a more narrow measure of it, right, the large caps, SLI, you got the same sort of a pattern here. This is not a place you want to be if you're in this market. You've got the same setup across the board on the large caps. And that is that this is a downtrend, and this is trying to break lower. Where is the action? If you want to be in stocks, you want to be in the small caps. Because in the small caps, you have a totally different picture. So notice here that you've already broken swing points highs on the way up, right? Nice big breakout. You're bullish in terms of trend. You changed trend quite a ways back. You've got some good action taking place here in the small caps. Pull it back on a weekly. You can see they've pushed almost to the new highs. Same thing here on a monthly. You know, when this market tries to push, the small caps are the ones that are doing the push. And you can see here, as the others are testing these lows, the small caps didn't even come close to the prior lows. So certainly in the Swiss market, this is the area that you want to be located in and working. Now, if you look inside this and you say, okay, what do the sectors look like? You know, what sector should I be focused on? The two sectors that have been pushing things in particular for a while here are the basic materials. And you can see basic materials up here at the highs. You're pushing up towards the highs on the weekly time frame and also on the monthly time frame. So they had broken out sometime back, way back here, and they continue to push in this larger range. You can view things in terms of ranges, right? So we can easily say, oh, I can kind of see that range there, and I can kind of see a range up underneath it of about the same magnitude in terms of size. And when you see that, right, that you can think of it as kind of like floors, right? You got the first floor, and now it's up in the second floor, and it's trying to break out and do another one. If it does, it will take and duplicate that and try to push it that much higher. So you want to watch those floors, watch for those ranges to set up, and for continued strength to break them even higher. And if you're looking at it in the opposite direction, it would be exactly the same case back the other way. Another group that's been strong is consumer services, right? If we look at the services breaking out, pushing higher, swing point highs, testing here on the weekly, and you got that same sort of a range setup on the monthlies as well. And so if you want to be in either of these groups, both of these groups are performing and giving you nice upside potential all the way up, right, in those ranges. Up here testing this one, trying to create a new one to the top side. So consumer services, basic materials, but we also see some breakouts attempting to take place now elsewhere. In particular, I see the utilities breaking out this week on a daily. Here they are pushing and breaking out. When you break out on multiple swing points, multiple time frames, and that's what just happened here, right? That gives you the ability to get 2 to 3 bars more to the top side. So look for the utilities to continue to push and to try to push hard. Another group that's really starting to try to put it into gear is the technology group. So you can see it's over these swing point highs as well, pushing up here, going after the next set. This was what we call a breakdown bar. This big blue bar, that becomes the target on the way back up. So look for the tech sector. If the continued push, right, had a breakdown bar here as well. If the continued push is in this sector, this is going to be the next target. Got to get over this, stay over it. It's over it now. Let's see if it can stay over it. If so, tech is another place you might want to be looking. As far as how this market looks for the coming week, we need to take a little bit broader view, look at the world markets, in particular look at the European markets. Here's the weekly on the German DAX. You can see that same sort of pattern that we've been talking about here in the Swiss market, and that is that this is a downtrend, right? You bump up here, but you're trying to roll it back over now. DAX not looking so good. If we look at the CAC itself as well, same sort of story there. A little bit stronger, but also starting to roll back over. That's on the daily. Here's the weekly. Exact same sort of a pattern that we saw in the Swiss market. If we look overseas, you know, if I look at like Japan, for example, Got the same sort of scenario over here. Japan getting whacked pretty good on Friday. If we look at it on a weekly, you got the same pattern. Why is this? Well, it's because the dollar has been pushing lower. If we take a look at the dollar, I'll pull it up here using this. You can see on the dollar that we're coming down after the lows. And if you pull this back, put it on a monthly, you'll see that the dollar had been on a big spike higher. Of course, that pushed overseas currencies lower. Now, the Swiss currency, of course, as you know, a little bit different. It's not part of the euro. Got your own currency. And trying to keep it from strengthening is what the Swiss bank keeps doing, the central bank. But it's having a hard time. It's seen as a safety valve, and people like to move to safety in times of trouble, and that is a problem for the central bankers. But the dollar itself pushed up sideways to down lately. It's in this broad range. If that dollar does begin to push again, if we start to see this start to push up, right, and make another move to the top side, then we would be looking at potentially pressure on the Swiss franc. And if we see that, right, then that would help the equity markets. But that's a little bit farther off. Right now, looks to me like the Swiss franc being strong as it is of late, which you can see here on the daily chart, that's going to continue to put pressure on this equity markets, right? Because you just can't get the kind of move that you want to get if you're doing ABC structures to the upside. So we got an A point here, B point there, finishes it off here, and then we of course make this an A point on the way up again. If we do it again, you can see how this becomes your A point, a B point, a C, and now another D point that's a little bit higher. So ABCD structures on the upside. You've got larger ones if you're looking at the weekly. Matter of fact, let's pull up the weekly chart. You can see the ABCD structures here that are starting to form when we look at it. And so I would say an ABCD pattern here could take this one on up roughly into that area, which would attack this swing point high and push to the next ones. So currency, of course, a big deal, especially in Europe with the euro. That peg was broken back about a year ago. We'd have to go to the monthly chart to see that back here when they unpegged it. And of course, that was a wild day in your markets. Since then, you know, they've depressed it, but now it's coming back up again. It's just popping its head back up. And, you know, a stronger franc is not going to help the equities in that market. So if I look at it as a whole picture, stronger franc, rollover in the broad market, European equities weak. Doesn't look to me like the Swiss market's going to get very far. Those small caps, if they start to roll over, that's probably the signal that the little top pattern that this push up is probably over from February, or at least it's going to take some sort of a retrace before it tries to push higher. Looks to me like you're on hold at best, and if anything, we're going to get some sort of a retrace starting to form here. That's it for this week. I thank you for joining me, and look forward to doing this show on a weekly basis and sharing my thoughts with you. If there's anything you would like to see me do that I'm not doing, let me know. Give me some feedback. Until then, take care.